Hello, Oracles. Well, Tesla stock dipped a little bit today as Tesla China announced that they were cutting prices. As we've seen in the past, the market kind of overreacts to that, sells off dramatically, then they kind of actually digest the information, and it rebounded a little bit today. So we did finish down just over 1%, but we'll get into the details behind that, plus the TSLY payout today, along with the other YieldMax ETFs. Very exciting to see this. I'm going to be sharing with you guys my entire dividend strategy that I came up with over the weekend in a later video, but really looking forward to sharing that with you guys. I'm just finalizing some things. Everybody who is a member or patron, you guys have already seen that spreadsheet. I have already updated it since then, and I will update it again this weekend for you as well. So we'll get into all of that in just a minute. All right, so looking at the charts, again, we just continue sliding in this downward trend, down 1.19%, closing at 239.76. Now, we did fill that gap at 235. We hit an intraday low at 233.76, so that gap is now filled. The next gap below us from here is 221.91. We will keep an eye on that as this downward trend continues. Now, looking at what Gort has been showing, look at the Fibonacci, looking at the RSI here, and the RSI is at 38. Again, heading to that oversold range. There's a very good chance we could be filling this 221 gap. Just need to pay attention to all of the information going on. We're kind of getting into a bit of a negative sentiment cycle that we're in. We've been basically on a downward trend for the entire month of August. Now, when we look at TSLY, again, same downward trend in this same downward channel, and it's been basically trending with TSLA. Now, when you look back at some of the payouts that we have seen when it comes to TSLY, there were some really nice payouts that we had seen going into the last couple of months. The lowest one was the 44 cents per share, which is still pretty high, but that was the payout in May, and that covered the April timeframe. Looking at the April timeframe, it was pretty much straight downhill. So while we saw an awesome 83-cent per share payout today when it comes to TSLY, looking at this downward trend, if April gives us any indication as to what the payout could be for September, it might not be anywhere near as high as 83 cents. This is one of the risks when it comes to TSLY. There is a lot of volatility when it comes to the dividend payouts. I don't know for sure, just strictly going by 1 month trend in April showing 44 cents, we might see something very similar for the September payout. Now, the one thing I did notice today was, as we were discussing before, is it T+2 or T+1 for when you need to purchase based upon the X date? Gort and I had been talking and making sure we played it safe by buying it 2 days before the X date to make sure that we were going to have the shares to qualify for the dividend. Well, based upon my last month, I bought them on the T+1 day. That's 1 day before the X date. And that just happened to be the same date that they came out with what the dividend payout was going to be. I purchased on that date and I got paid out for those shares. So it looks like we can see what the dividend payout's going to be, determine if we want to purchase it at that time and how much we want to purchase, and then you can go ahead and do that. Now, what we did see last time for TSLY also is on the X date, we do see the stock drop the amount that the dividend is. So it was around $16 at close on the day before the X date. The day of, it dropped down to about $15.17, which was that 83-cent dividend. So we may very well see the same thing. So this is why, sometimes if you're going to try to buy it the day before and sell it the day after, you may not actually get any benefits from it because the stock is going to be dropping that amount. Now, another strategy that I think about as well is based upon what Brad Ferguson had discussed. Yes, while Tesla stock itself is going to outperform TSLY over the long term, there could be some segments of time where you might actually benefit by having TSLY. Those downhill trends seem to be those time frames. So in the month of August, having TSLY might actually outperform TSLA. We can do a little research on that ourselves as next month rolls around. We'll take a look at that. But when we're looking at this longer term, yes, in the near term, I think we see this downward trend continue. Maybe we get a really ugly macro environment, pulls everything down. That's a time to accumulate. So unless these YieldMax ETFs completely fold and go under, there's a good chance that we are going to recover, and that could be a great time to accumulate as many shares as possible. Now, the other theory is if you're accumulating shares of TSLY, but TSLA actually outperforms TSLY, why would you not accumulate shares of TSLA while we've dipped? That is true. I am going to be doing both. I am personally looking for that cash flow generation. This is why I'm more into the TSLY, but I do want to have both because TSLA is the investment that I truly want for the long term. TSLY for me is just expediting the entire situation. I want cash flow coming in. I'm looking to leave my job. I need that cash flow. But I am taking that cash flow and putting into other dividend stocks and ETFs because realistically, I don't want to hold TSLY long term. It's expensive. The expense ratio is 0.99%. That's very expensive. So for me, I would rather take that money, kind of use it as a catalyst to boost myself up in other areas to be able to buy other stocks and ETFs and reap the rewards of those dividends as well. But again, I'll get into a video with all of that in more detail later on. But based upon what we had seen, this is what it looks like the trend could be between TSLA and TSLY. All right, so now jumping into the news that initially brought down Tesla stock today. Sawyer Merritt posting, breaking. Tesla China has announced it has lowered the price of the Model Y long range and performance by 1950 US dollars. There's now also a limited time 8,000 yuan or 1110 US dollar credit for Model 3 buyers. Offer ends September 30th. So the two things to take away from this are, yes, they cut the prices over there on the Model Y performance and the long range. However, if you take notice, that's really only 20% of the vehicles that Tesla sells over in China. They sell much more of the standard range Model Ys than any other Model Y over there. So yes, this is a little bit of a hit, but the market then kind of realized this and rebounded a little bit. Now, that credit for the Model 3, that's actually significant. Really kind of makes you think and wonder, hey, is Tesla actually going to be doing this refresh for the Highland that's coming out? Is this why they're trying to clear out the inventory that they currently have on the Model 3s so that they can start in October in Q4 to have the new refreshed version coming out? Now, if you think back to when the S and the X had their refresh, Elon did say he really wishes they didn't take down the lines entirely for this because it really took them a long time to recover from this. Obviously, they have learned from that mistake. So if they're going to be coming out with a refresh on the Model 3, which is clearly a much higher volume vehicle, they're going to want to do this in stages because they're not going to want to lose all of the sales. So this could be their strategy to be able to get out this Model 3 refresh is to do it by thinning out the current inventory that they have and then kind of changing over one line at a time to get out this new refreshed Model 3. So we may have some people getting the new one, some people not. So I'm not exactly sure how this is going to end up going out, but I have a feeling that they're not going to be shutting down lines entirely and then starting over again. However, China has showed us that they can ramp up extremely quickly. We saw that during the COVID shutdowns, they came back up and online, and within 4 to 6 weeks, they were back at it as if nothing had ever even happened. So that could very well be happening for the Model 3. So perhaps they're doing some tweaks, and perhaps Q4, we actually get the official refreshed Model 3 coming out of China. Now, some other news coming out from Wuha posting, according to Indonesian media sources, Tesla CEO Musk will visit Jakarta, Indonesia at the end of September or October to discuss investment in lithium battery materials manufacturing and discuss the, quote, star chain to provide internet access to remote areas in Indonesia. So now the significance on this is, we've talked about it before. Indonesia has been asking Tesla to come and put up a factory over there. They want the whole shebang. They want everything. They want EVs, energy. They want the supply chain, battery plants, all of it. So it seems like if India is going to be the focus for Tesla right now, Indonesia might be the area that helps supply all of the materials. So we know that when it comes to the EV tax credit in the US, the countries that need to be involved have to have that free trade agreement with the US. Indonesia is one of those countries. So while selling vehicles out of India is not going to help with the US EV tax credit, if Tesla can set up a supply chain in Indonesia, that is a nice backup plan if just in case anything happens in the US and they need to go outside the US to be able to get supplies for their vehicles here. So that is a great place to have that. And I think that's just going to be a stepping stone. I think Indonesia is going to have a lot more than just a battery factory over there. I think Indonesia is going to end up having exactly what they're asking for. I think Indonesia is going to get the energy. I think they're going to get the EV factory, a lot in the works there. But I think they're going to start with batteries. India will be the focus for the next EV factory, and then we'll take it from there. And then, of course, we have the Elon Musk and Mark Zuckerberg fight that some people are saying, hey, this is just going to add to the negativity and the FUD when it comes to the sentiment for Tesla. Other people are enjoying it and just kind of living it up. Elon is just being Elon and doing his thing. And he posts out, for the Tesla FSD test drive tonight in Palo Alto, I will ask the car to drive to Mark Zuckerberg's house. We'll also test latest X live stream video so you can monitor our adventure in real time. If we get lucky and Zuck actually answers the door, the fight is on. So now again, fight aside, Elon has been testing out version 12. So it will be really interesting to watch this live stream over on X of him driving over there trying version 12. So when it comes to version 12, we know that it's just QA testing. It is nowhere near ready for us as the public to be able to try this out. But this is the complete AI rewrite of what we are currently seeing, and version 12 is going to be the alpha version of FSD. That there is what is going to change the game for the entire automotive industry. So really looking forward to that. The fight, whatever it is, what it is, don't know what's actually going to happen. As far as I'm concerned, these are just two guys who just have, so much success that they can go and do things like this. But those of us who are just investors have to discuss with each other as to whether we feel it's good or bad or not. It's going to be happening one way or the other, apparently. So we shall see. All right, now shifting away from Tesla for a minute. Again, seeing as I'm diversifying, going into more dividends and things like that, Tesla is going to be the main part of my portfolio still. But how can I generate more cash to be able to invest in more Tesla and get myself to a point of living financially free? Well, Sofi is one of those ways. Data driven investing posts out SoFi management has extremely high shareholder alignment. Here is how much it's worth to the CEO Anthony Noto, CFO Chris Lapointe, and Galileo CEO Derek White to get the stock price to $25, $35, and $45 by July 2026. If the stock doesn't reach those levels, all these performance stock units expire completely worthless. Management is highly incentivized to make sure investors see outsized returns in the next 3 years. So now all of you who have been following Tesla fully understand how when it comes to these tranches for compensation packages. So here we see for Noto, almost $300 million. Lapointe is over $37 million, and White is almost $34 million for hitting all three of these targets. So now, of course, nothing is guaranteed. We don't know what's going to happen. But when we're looking at SoFi right now, sitting at $8.68, even getting themselves to $25, that's almost a 3x. So that in and of itself tells me that I'm going to start dollar cost averaging. I have started up a position with DCA of $1 a day into SoFi. Again, it's not a lot. I'm still working on other areas to get my cash flow generation coming in. But SoFi is a financial. SoFi is a financial company that is one of those disruptive companies when it comes to the banking industry. So they are still currently young, but they have a lot of potential. Some people say they're like the Amazon of the banking industry. So when it comes to that, it's something that I want to get into. And I have a feeling in the long run, as long as they stay successful, they will end up paying out dividends as well. So for me, I'm going to start this position here. They can grow. And this is a company where I'll dollar cost average into it. I will still add more, accumulate shares at this low price, make sure that they stay on track as they grow. Maybe they split, maybe they offer dividends. A lot of potential for this company. I love the platform itself. I'm on there. I have a lot of my investing on there. I've done banking through them. If you use the link that I have down in the description below, you can get $25 back when you start using the banking as well. So it's just a free $25 to use them as a bank. It's pretty awesome stuff. And in return, I would end up getting $75. If you guys are members of SoFi yourself and you share the link, then you would get $75 also. So really cool platform, great company. Looking forward to them growing in the future. And again, their upper management has a lot of incentives to get them to those levels in the next 3 years. So, anywhere from a 3 to a 5x in the next 3 years, that's a place I'd want to put my money. And one last thing that I wanted to share as well, when it comes to cryptocurrency, for those of you who are in cryptocurrency, Coin Bureau posts out, mark your calendars, the updated timelines for the Bitcoin ETF approvals are here. So anybody who knows when it comes to ETFs or different funds that are out there, if there's funds that have our stocks in them, like Tesla, when Tesla got interrupted into the S&P, major boost. This is not going to do something like the S&P. However, when you have ETFs out there, that creates a large money flow going into these, which could boost up those prices of these cryptocurrencies. So looking at these here, there are 8 different ones, and one of them is from BlackRock. So, BlackRock is one of the biggest ones out there. Wisdom Tree is big. I mean, all of these are pretty big. And so looking at the different dates that they have coming, so we've got deadline dates of September, October, January, and March. So we've already passed the June one when it comes to ARK. That has come and gone. So now we're just waiting for these September ones that are coming up. Whether they get approved or not, I don't know. Again, there's 4 different deadlines that we can hit, and these are just things that we're waiting on. So not guaranteed that they will end up going through, but just paying attention to it. If they do end up going through and getting approved, we could see quite a boost when it comes to all of the cryptocurrency out there. And in looking for the future, trying to figure out, hey, where do I want to put my money? I think Tesla is one of the best places that we can put our money, not financial advice. But looking at other areas as well, if you want to diversify, Seth Klarman had a couple of interviews recently. He's a legendary billionaire investor who even Warren Buffett says is one of the handful of people that can outperform the indices. And so for him to say that about this guy, it means that he's really good at what he does. And what he's talking about now is when you're looking at different companies and where you want to put your money, he doesn't name anybody in particular, although he did just start up a position in Coinbase. One of the things that he talks about is, what do you see as changing? One of the things to factor in is, yeah, you can go and buy yourself a nice value play like what Warren Buffett has. And sure, you may see some nice growth out of it, but you have to look at other companies and other factors as well, like disruption. If you see disruption coming, maybe you don't want to get into a company that could be getting disrupted. Maybe it was awesome for the last 50 years, but if that company is about to get disrupted, you're not going to want to invest in it. You're going to want to invest in the companies that are going to be disrupting that company. That's why I looked at companies like Sofi. Sofi is going to be disrupting banking. Tesla, obviously disrupting the automotive market. Cryptocurrency could be, nobody knows for sure, but that could be disrupting some of how we handle transactions when it comes to money. So these are the different things that I'm paying attention to. I still diversify. I still like some of the index funds for some safety. I still like some of the other value plays out there, like of a Bank of America, just for safety's sake as well. But I also want to look to the future. Obviously, you have to take it little by little, make sure the companies still do well, put your money where you think it's going to be safe, make adjustments as you need. But looking at what a guy who is as smart as Seth is saying these things tells me that these are the questions I want to ask myself when I'm trying to decide on what companies I want to choose to invest my money in for the future. So again, none of that's financial advice other than basically what Seth said, which is pay attention to what you think you're going to see in the future. We've talked about it on here all the time. It's about the long-term future. If you're swing trading, that's different. But if you're looking for long-term investments, take a look at these companies that you think are going to be changing the world in the next 5, 10, 15, 20 years. Those are the companies you're going to want to start investing your money into now. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.